Today is October 26th, 2010, and this video presentation is in support to our market view dated the 25th, which is yesterday. And we're looking at 5 comparative charts where the euro dollar, the pound, the cross rate on euro pound, as well as the pound and the yen as against the dollar and the yen on a daily basis on a 4 hourly chart. Now, with today's news on the European, on British GDP was better than expected at 0.8% compared to the expected 0.4, which prompted the pound to move higher, which we actually expected without having the notion here that the pound would now make a high at the levels of 1.5894, as you can see, from a low of 1.5705. And this was prior to the report. However, what fueled the market to ignite and accelerate higher to these price levels was simply because of the unexpected surprise on the GDP, which actually showed that the pound strengthens, and even though the euro compared to the pound rather, excuse me, with a high of 1.3981 from a low of 139.19, barely moved much. But you would see here on the comparative charts between the euro and the pound, as you could see here on a daily basis, that a spike formation, we call this a spike formation during those days, but however the engulfing bar from a previous long down bar, which also has a similar configuration here on the pound. However, at this point, we would like to emphasize that if you look at the weekly on the pound here, let's see if we can get it right, that from the previous week showed a long-legged hanging man, or a doji as some other may call it, with a long bar down, which it corrected, and it really looked like that there is a double top formation, and the resistance price levels here would well be in the 1.59 level to 1.6105, which was the previous high of this bar. But however, this is actually, we call a bull trap, where we anticipated that it closed on the trend line at 1.5697 and opened on the same levels. And looking at it now, reaching a high of 158.92 already is within the same trend line, which is obviously higher if you look at it on a monthly basis here. However, if we look at it back on the weekly, the tendency now is to try and attempt within the next few days or even next week that it could move higher and back to the 1.6090 level, trying to reach the previous high of this particular bar at 1.6105. But however, it would have to take some momentum, but on a weekly basis it is still showing a negative stochastics here, where a considerable convergence did occur. However, the correction was made, And now, even with the momentum slightly lower, but because of the good news as far as the GDP in UK is concerned, then we're looking at it that the prices on the pound would have to move lower, except the euro will not as move as much simply because of the reaction that the euro pound here made a correction, and it's from a low of 0.8774 from a previous high of point. Let's see if we can get it right here, or let's get this one at the levels of 0.89 even. If you could see here that this particular bar, although it may not be called an island, but this three configuration of bars signaled where the prices have exhausted. It is more of an exhaustion, because if it opened higher in this level, then it could have been a runaway gap with a gap higher, but unfortunately it opened lower or the same and moved lower with a follow through today simply because of the report on the GDP. With the cross rate moving lower still and moving in this direction of 0.8755 value on the moving average, on a 21-day moving average, and slightly above the 0.8749 trend line, where a corrective movement higher would be expected. However, if you look at it here on this particular configuration, with a low here at 0.8715 and extend it higher, correspondingly there would be a typical technical buying convergence or divergence rather, that's the reason why it may be able to move and see a correction on the euro. But what we would like to emphasize really here is, since this is really too much of a spread on the range, let's try to make it more clearer. You could see the similarity of the configuration here, and although it may be called a spike, it is also a buyer's trap. However, moving to this low side on the support level of 1.3697, well, nobody would dare buy at those price levels on the euro simply because the overall sentiments were negative and everybody's been expecting a correction on the euro simply because of this two configuration of bars where you could see a typical T formation and a doji signaling a down movement, but however, like I said, the acceleration or the angle of acceleration is much stiffer, and with considering the volumes are much greater, although there is a slight decrease on the momentum, but however on the moving average convergence divergence, it is now going to continue to move higher, and in consideration of that, both the euro and the pound are still in the general direction where its major trend is still moving higher. Taking that cue on the pound, where we actually anticipated that there may be an attempt to penetrate the double top formation, since that is one of the idiosyncrasies of the pound versus the dollar, even without the GDP report. However, that was the reason why it had fueled and triggered the pound to move higher. And considering that, taking a long position on the pound would have been taking a arbitrary hedge. So at this point, when you take a long position on the cross rate on the pound yen at this price levels below the 1.28 level, and simply because of that news that triggered making the pound stronger than the yen and taking advantage of the interest rate differential between the pound and the yen on a carry trade, now that the yen is still working at the 81.10 level, where a correction is actually being made simply because it came from a 15-year high for the value of the yen at 80 point. Let's see if we can get this thing at 80.39 on the dollar yen. And looking at it now, that correction is being made simply because of the oversold conditions on the dollar yen as well as the dollar in itself. However, like we would have made this recommendation, that looking at it, the euro, the pound, as well as the cross rate on the euro pound, that eventually the reason why the euro has not moved as much is simply because the euro pound cross rate is dragging the euro and holding it back, while the pound in itself against the dollar is simply trying to keep pace with the price of the euro. So it's basically the highlight of the today's movement would be for the pound to move higher. Thank you very much and have a pleasant day.